Hey everybody, this is David Skarica here. We're gonna do a quick video here. Okay, I know that I initially said I'm sorry for keep putting this off, but I've had to set up a whole bunch of new billing things. I'm setting up the members pages, plus doing content and all this stuff. Not surprisingly, has ended up taking me longer than I thought. So we're gonna do it July 1st. Definitely, I think I'll be done by July 1st. We're gonna launch it. So Canada Day, if you're on holiday, maybe you'll be able to just sign up before you do what you got to do. I'll put it out first thing in the morning, July 1st. I'm not going anywhere. It's weather here is beautiful as usual in the Bahamas, but I got a friend visiting. I've had to basically tell him, sorry, man, I got to work on this, and so I'm just staying in my house. And I'm leaving on Sunday for Europe, so which won't hinder my work at all. Like the timing will be a little different because I'll be in England for about 6 days, in Spain for about 2 weeks, in England for another 3 days. And then I'll be visiting Mike Swanson, I think, on the way back. So first time I've gone anywhere in 3 years. So I want to launch this before then. And believe it or not, I think I'll have more time for content. I know a lot of people think, oh, you live in the Bahamas, blah, blah, blah. It's paradise. It's this, is that. Okay, all right. I'd rather live in the Bahamas than, Detroit, but no offense to those of you who may be in Detroit. But like right now, all three of my automobiles are not working. I got issues, a few small issues with my house that need to be fixed. Here, it's just because of the elements, because it's difficult to get stuff on the island. You're always dealing with something. So it's like actually not the great quiet place you think it is. I think if you're super rich, you're like, one of the uber rich billionaire, or like, I know Lenny Kravitz lives here and he has a recording studio here, and you can have a bunch of people working for you and take care of all your problems. That's great. But if you're just kind of well off like me and you got to deal with all this stuff, like I'm actually looking forward to go. As much as I love it here, it's like, you know what? I've got it all set up with mechanics and everything that these issues with these cars, the automobiles are gonna be taken care of the 4 weeks I'm gone in July. I will miss my cat, especially not going anywhere for almost 3 years. I think my cat has become even more attached to me, and vice versa. But anyhow, so we'll get right into it. So what I'm going to do in this video is we're going to talk about like the markets. I'm going to give you a bunch of stocks I'm looking at, the stocks that I'm short, and tell you the only thing that you need to do, the only stock you need to buy. And this is the kind of thing you're going to get with the service. And I'll tell you the aspects of the service as well. But we'll do that at the end. Okay, so let's look at the markets here. I think the market is basically completed this last little bounce. I didn't even talk about it because, that was a pretty good reversal day we had yesterday, because I don't even think it's worth talking about. And we can see we're just kind of grinding lower. We're, kind of like 3 steps down, 1 step up, and I do think at some point near the end of this decline, we will see a little more of a little more of a waterfall type decline. But what's happened is so many people made so much money during COVID, so much liquidity was entered. There's a lot of people there who will buy the dip, as they say. So that's kind of what we're seeing right now. So anyhow, so let's look at all this. The S&P kind of looks the same way. So one thing I'm going to recommend you do on Thursday is I am recommending the big 3 that we have shorts on, and definitely Apple. And I'm recommending getting out of the shorts. We've done well on these. They've fallen quite a bit. Amazon, I think they're going to go lower. But the thing about it is what I'm really looking for now is smaller companies, which I think can be harder hit. You might want to keep the Tesla short. Tesla, I'm just kind of looking at if it falls a lot between now and then. I guess if it broke 626, I might enter, but I'm kind of waiting. We're just over a month away from Tesla doing their split. I might enter Tesla after the split because, the puts will be a lot cheap. So here are the companies I really want to short right now. I want anything that's going to be hit by inflationary pressures on consumer spending, housing, just, like consumer stocks, etc. So right now, I think you want to be short. My number one short is Home Capital Group. I know those of you on Interactive Brokers, you can, short this. You can see it fell 3.6% today. Basically made a new intraday low. I think that's a slightly new closing low too, 52-week low. You can see actually the lowest level since November 2020. I think it's going to be ultimately to the 2020 lows. I think it's going to go lower. I think it's going to go back to the lows it made years and years ago in 2017. And that's when it was having regulatory problems. You can see like this here, So I think that kind of thing might happen. I wouldn't be surprised if that kind of thing happens on the next earnings. And the reason being is these higher interest rates are killing housing in Canada. Toronto, a lot of areas are down 20, 30% in just the last few months. Of course, it's subprime, so it has higher interest rates, et cetera. So I definitely think it can go back to the 2018 levels, and that's a 2020 low, basically, that 12.5 to 15 area. So what I'm recommending is I have 15 January 22s in case it takes longer than I thought to plan out. I got 15 September 26s, which is already in the money. If it falls a couple more points, I might roll those out. And I just bought 25 of the September 21s. So, and that's, anticipation of this. If I sell the 26s, I'd probably roll into those 21s and this. And I have to see where it is. You can see when the gap down here in 2017, the stock had gone to 17. At 17, I'd probably adjust the position if it's at pre-earnings, and I'd probably be buying, some 15, something like that, and something in that regard. And I might have a couple calls just to hedge it, but I really haven't. I can't see this company. I could see this company not even surviving this downturn with this spike that we've seen in interest rates, right? So then another short I like is RIX. I've talked about this. You can see that RIX has kind of come out of, I shorted it around 55, 56. I bought I think the 55s, or I might have bought the 50s. I bought the 50s. That's right. I bought the 50s when the stock was 55. And you can see RIX is already in the money. And again, it's barely even bounced here. Because again, disposable income, RIX also has, and they're expanding at the wrong time. They're expanding, they're taking over all these new clubs and restaurants at a time when consumer spending and consumer confidence is collapsing. So I don't know if it's going to go back to the 2020 lows, which would make us a killing on this, like we'd be $40 in the money. I only bought 3 of these. It's a small position, but the 1,500 would go to like 50, basically like, 12 to 15 grand under that. But you can see, even here all through 2015, 2016, RIX was about a $10 stock. And you can see even pre-COVID, the high was about 25. So yeah, I think this can go down again, consumer spending being hit. Another way I like doing it, because the deterioration of corporate credit, I think Moody's is still a good way to play that. It's kind of a more leveraged way of, say, playing corporate bonds, because as there's less bond issuance, it means that Moody's is going to have less business and the revenues are going to decline. And one of S&P, one of their competitors, already warned of weak conditions, right? And so another one I like is Churchill Downs. Churchill Downs is kind of the last gambling stock standing. You see it's held up pretty well. It's right here at support around 185 to 190. I think I own the 180s or 185s. So same thing again. If we go to pre-COVID levels, you're talking 160, which is a nice drop. But I think again, you kind of look at where it was trading in 18. I think $100 is pretty reasonable if the market really tanks. And again, consumer spending, you're paying more for gas, you're paying more for mortgage, you're paying more for rent. It means that you're gonna go to the track less, etc. Like people say, oh, when people are desperate, they go to the track. But, people go to the track when they're desperate and they have their last $10 and they take a long shot, and maybe buy a couple drinks, and that's what they do. When people have money, that's when they're going betting on every race, et cetera, right? So there's another one, and of course, my last one is NVDA. NVDA is right here. It was down 440 today. It's got this support and kind of like the 150 to 155 area. And again, we talked about the pre-COVID highs. You're talking about $75 a share. And if it goes back to even this trading range here, it's 125. So in NVIDIA, I own some 130s, Septembers. Part of the reason I'm doing Septembers is I think things will play out over the summer into the fall. And part of the reasons too, it gives us another earnings in all these companies. So all these companies, I would recommend Septembers to Novembers or Januaries, you know, because I think you want this ahead of me. And I'm not trading in and out of this now because like I knew their volatility would be more in terms of rallies and this and that. But if we go look at it, these rallies are getting weaker and weaker, right? I think that's what happens. It's people throw in the towel. You can see this. These were like the big rallies here, you know, in January, in March. And notice like, you know, here there's a small one in May. This one, that was the bigger one. And this one here, but like they're not what they were like back in March. You're just going to see these rallies. You can see that one in March, like that lasted 3 weeks and took the NASDAQ up over 2,000 points. Like the last couple have only taken the NASDAQ up, you know, over 1,000 points and lasted basically a week. You can see the NASDAQ has actually lost almost most of the, not most, but half the gains the last week. Now, I don't know what's going to do the next 2 days because you got 2 like trading days going into a long weekend, but I definitely think that, you know, I'm looking at maybe adding to some positions. So also too in NVIDIA, I added personally 10 of the September 90s, the way out of money ones I have. So I call them my lottery ticket puts. I use that as maybe 5% of my put position because it's like, oh, if there is some kind of huge gap down or huge decline, you know, you're going to see that. So I think anything with consumer spending, like we're seeing Bed Bath & Beyond looks like it's going to go bankrupt. And you can see that here, that went from 26 to 5. So I think anything with consumer spending, you know, I had Macy's as a long a little while ago. That might be another one to look at as a short. Anything to do with consumer spending. You know, I don't have the position in Penn anymore, but you know, and Penn jumped up here a little bit too. Part of the reason I don't think I think Penn's now beaten up enough, but anything where it's disposable income, those things are going to eat into, etc. So that's kind of what I'm looking for. But one thing I do have to say is I do think in the short term, you know, we've seen see this decline here. We're actually back to like the April, May levels on commodities. I do think in the short to intermediate term, we are going to see a decline in the price of commodities. So look at this huge run we have. Now, I don't think it's going to be like the 2008 decline, you know, and you can see boom, that took off, you know, the last 6 years, you know, and I don't think like we go back to the lows, like we went back to 2002 levels. I don't think it's going to be like that, but I could definitely see if you're talking about the CRB bottoming at 100, now at 300, it going down, you know, 20, 30% on a stock market decline before the Fed begins to reverse course. So I think now is the time to take to kind of be more conservative on commodities. We saw cotton get killed the other day. It looks to me like oil could have a short-term top here. But what I would think that, again, unlike 2008 when you saw this, and definitely we're not going to see that negative thing we saw like in 2020 again. And in 2014, 2015, what happened? We had the dollar soaring and fracking production soaring. So that did that. I don't think we're going to see that again too, but I could definitely see, you know, a $70, you know, move down in crude. You know, and if you go look at the seasonal of it, look at the peak in 2014, it happened right around the middle of the year. Look at the peak in 2008, it happened right around the middle of the year. So seasonally, we're in this time when oil kind of moves lower too. So I'd be a little more cautious on that. And this is going to bring me to the next thing. So that, and I think it's all has to do with, you know, them raising interest rates and kind of us getting another decline. Now, with that said, I could see a rally in the bond too. I could see a decline in long-term rates. Now, as long as the 2-year bond, I've said this over and over again, the only thing you need to watch, so that's the yield curve, is the 2-year bond. The 2-year bond always predicts what what short-term rates are going to do. Right now, it's 3.10. So that tells me it looks like the Fed is going to go another 75 at the end of July and then do another 50 in September. That tells me that 125 with the Fed funds rate right now being, you know, 150 to 175, that 125 is probably going to happen because that moves it to 275 to 300. And after that, I don't know. That's when you may see the pivot if commodity prices fall enough, if you've seen enough deflation, if you've seen enough declines in housing and the consumer. But, again, if I go back 20 years here, I'm just going to go back the last couple cycles. We go back, actually, I'm going to go back a little longer so we can see the 2000 cycle. Let's go back 30 years. Okay. I'm not going to worry, but okay, we can even see 94 when it went to like 7%, but we can see again, went to 7%. The Fed funds went to 6.5. Then it went back to like 5.25 here. The Fed funds went to about 5. And then we can see here, it went to 2.75. Fed funds went to 2.5. Now we've gone as high as 350. Now we're 310. So I think about 3% is where we're going, a minimum. And you notice that, okay, even here, it took a little while for the things to come down. The Fed funds doesn't collapse. Here it went sideways. Even in 2000, it kind of like hung around. So I would say that after they do that in September, you're not going to see it just cut right back to zero. Maybe they could slowly start cutting, kind of like they did in 2019, but I don't see it just like going back to zero, So that's kind of what I see here. And more than likely, we're kind of like in the scenario, probably like we were in 2007 when the market began to decline as well. This 2-year treasury will probably start going sideways in this 3 to 350 area. And then move lower. So I think you're gonna have a great opportunity now. Build up your cash, have these puts as hedges, buy stuff like the hedge. I bought this added a little more the other day. This is a nice, it looks like it got killed, but it got killed, it was a bear bull market. But see, it looks like it's actually coming out of this big base. And this could go to back to $50, $60, be a great like conservative hedge for those of you who are a little more conservative. But I'm gonna show you 2 stocks, both from Brazil. I think these are the only 2 stocks, and this is the kind of advice we'll give, and we'll tell you when to pull the trigger, et cetera, when I start the pay for service. But the first one is Petrobras. So this is, of course, the Brazilian giant. It's way off its all-time high, but I don't really care about that. This is going back 10 years. You can see it's near a 10-year high. But if this can go back, so you can see it went to $2 in 2016, it went to $3 in 2020. I don't know if it'll go back to then, but let's say this can go back, it's already come off from about 15 to, 11. So $4, Well, let's say it can go down another $4 or $5, go to 6, 7 on the coming decline. This plays almost a 40% dividend. I think it's 37%. This could be paying 50, 60% at the bottom, I think that's, if you can say, just buy one stock and put it away forever, you get Petrobras at under $6 a share. You may not get the exact bottom, but at that point, your dividend would probably be at 50, 60%. And you just forget about it. If you're someone who has a lot of money, like millions of dollars, you can buy a couple $100,000 of this, and be getting, 60,000, on a 60%. Well, now, right, at 60% dividend, a couple $100,000 be paying 120 a year. That's the kind of thing. You'd be 10 grand a month. You don't have to do anything. I live in the Bahamas. You go sip margaritas on the beach. So the other one I like is Vale. Vale plays at 15%. Now this will be a little more cap gauge. You can see it went to 2. Now it's at 15. Now it's a little more higher beta. Didn't get killed as much in 2020. But again, let's say Vale can go down 50% here. Because iron ore is very, very cyclical. And you can get this at 7 or 8. Now they'll probably have to cut the dividend a bit, but let's say the current dividend would be 30%. Even if they cut it, but again, you could get 25, 30% plus. If Vale goes or whatever, 6, 7, 8, you probably have upside. You could be getting a 30% dividend plus triple your money. So let's say, again, someone it's a smaller investor, put 10 grand into something like this, you could be getting 33 grand a year in your dividend, plus that 10 could go to 30, plus that 3 grand dividend might get up to 6 or 7. So you could be making 60, 70, 80% on your initial investment. And with something like that, like if you were someone who bought Vale at 2, even though it could go to 7, I wouldn't even recommend you sell right now. Because right now in Vale, you're getting like a $2 a share dividend. You're getting 100% a year. So if you put 10 grand in it, you're getting 10 grand a year anyhow. You're getting that money back every year anyhow. So there's no point in selling it, at that level. So these are 2 dividend plays. And this is what I've been waiting for. I know a lot of people, when you don't pay in the bubble, they call you names. They say this, they say that. They say, oh, is this now you don't understand the new economy? But this is this is what I've been waiting for. I've been waiting for another opportunity like this. And now that I've really learned from all my mistakes, now I'm really more patient to hold longer term. That's what I'm waiting for. So this is what I just want to show you right now. It's going to go to my Patreon account. So this is the promotion now. So if you like this kind of thing, this is what we're going to do. So what I'm going here to, give me a second here. I got to look for the, no, I'm looking for my, sorry, just give me a second here. I'm looking, I just set this up. Sorry, I'm totally new to this. So just give me a second here. Okay, so here's my page here, which I'll set up. Oh, no. Here's my membership. No, 1 second. Give me a second. Give me a second here. I'll come back to this in a second because I haven't set it up. Problem is it's on my other thing. On 1 second, I'm gonna get my other thing right now, and we're ready to go. Okay, perfect. Sorry for that. I'm not gonna edit that out because this is part of all doing semi-live stuff. Okay, so this is my Patreon account right now. So this is what we can see here. So these are my levels of service. Now, as you know, I'm doing this. Oh, there's that fourth one too. So I'm doing 2 levels of service. So I have a premium subscription, which is kind of my second tier, and my platinum, which is the first tier, and all access Patreon was the lower tier. So I'm asking you, I have about 200 followers on YouTube. I'm going to really build that up. I don't know how many of you are active. And obviously I have thousands of people who are on my free list, but I'm asking everyone to do this, even lifetime subscribers, if you don't mind. I really appreciate it. To do videos like I'm doing today, talking about markets, macro trends. I'm going to do a series on historical investors and keep them so I can keep doing them. $8 a month. That's like what? 2 coffees at Starbucks a month. Not a lot to ask. If you could just do that, and I could get, if I can get 500 people on that, that's great. Pays my basic expenses. I have my mortgage paid off now. So that I would really, really appreciate that, So then I have this deal, as you know, on the lifetime subscriptions. I'm going to go to my Addicted to Profits page so you can see that. So my lifetime and platinum subscription this is what it has. It's got a 3-4 weekly podcast, 2 weekly videos like we did now, but these are upgraded weekly videos where we actually talk about stocks and do stocks we're picking, periodic market reports every month or 2 on special opportunities. Like we'll write up a stock, I'll write up a sector, we do a special video on a sector, etc. A maximum of 50 stocks on a watch list, a maximum of 50 stock short watch list, maximum of 25 option positions, real-time text alerts. It's up to you. I'm going to do it through WhatsApp. So make it simple. If you become, a platinum or lifetime member, just, I'll have this list on WhatsApp, and boom, when I do the trade, like I did this trade today, but I'm also working on this on, or actually did yesterday on HCG. So what I'm going to do going forward is, boom, when I do the trade, I can just blast that list. And you can ask questions about the trade. I'll say, like, ask me 1 question a week. I'll limit people to that if that's okay, 1 or 2 a week, saying, I need to have a bit of a life. And then our charting service, stock chart of the day. I set up a Discord page. So if you want to talk with other members, obviously we ask people to be respectful of them and myself and for that sort of thing. And then I'm going to do a bi-weekly, so every 2 weeks, do a Zoom a meeting with members. And then special investment opportunities, private placements, et cetera, for accredited investments. So the service is going to be $200 a month. It's our $2,400 a year. But what I'm doing is, if you do the lifetime subscription for $1,000, which is a 60% savings over the regular lifetime subscription of $2,500, you'll get the first month or first year on the platinum service. And then also after that, the platinum service, which I just said there, is $200 a month. You will be only have to pay $50 a month. And at that time, it'll be for you to decide, which I'm going to show you in a second. So then my more basic service is my premium service, which is 1 to 2 weekly podcasts, one weekly video, periodic, those reports once every 3 months, on special opportunities, the stock watch list. I might not have all the stocks that I have in platinum on premium, just so you know. Start the stock chart of the day, also get the Discord service, and you also get access to the private placements. But again, if the private placements get hot again, I may have to give that to platinum subscribers first, and all the private placement opportunities will go to the platinum service people first, and probably with a 1 or 2 leg to premium. So, and that's $70 a month. I have a special thing where the first month will only be charged at $35. And for those of you on the lifetime subscription, if you don't feel that platinum is for you, you will just get bumped down to premium after that first year. But with premium costing $2,400 and me doing it for $1,000, and then you can renew it for $50 a month, which is $600 a year. 600, do the math, 600 a year times 2 is 1,200 plus 1,000, 2,200. You'll basically be getting, platinum for the price of 3 years if you were just to do the monthly subscription to the platinum. So that's really up to you. And so those are the I'm gonna do. And then of course, like I said, the Patreon thing for $8 a month on the basic stuff. So those are the offers. What I'm gonna start doing is a lot of these old videos I did too, by the way, that have stock picks, etc. I'm gonna start restricting them and putting them under I have a password protected file for both the premium and platinum sections. And I'm going to start doing that probably, July 1st. And I know some of you are worried because it says my website is unsecured. That is not a problem though for credit card information, etc., because there's a link that will send you to the ClickBank site when you subscribe just for the premium service. I'm going to click on it right now. So it has nothing to do with my website. And I'm updating my my website right now, this thing called the SSL, and the SSL will be updated probably tomorrow over the weekend, and my website will again be secured. It just, I had to upgrade my website provider, my information with them, and then that doesn't kick in until Friday. So hopefully that will all be solved by the end of the weekend. So you'll be doing that, and then of course the 200 a month or whatnot. This is all through Patreon. And then also if you do, the easiest way to pay me on the platinum, the $1,000, the lifetime, is through a wire payment or PayPal. I prefer a wire payment because PayPal, I have to do it through my assistant because I can't link my Bohemian account to PayPal. So I prefer a wire, and I appreciate you doing a wire, but yeah, so those are the services. And it's like this thing, if you like these ideas I have, like with Vale, with PBR, etc. Another one I've talked about in the past, I'll give you one more. TO, this only pays a 6% dividend now. So this will be more of a combo. Like you can see, it's come down from a high of $30. It's down to $4.50. So like, let's say like back in the Argentinian debt crisis, and Argentina might have another debt crisis again. You can see TO in 0102 went to, nearly 25 cents a share. And then it went to $30, over the next 15 years, basically. So if you can see the break support here, maybe we'll go back to the 08 low, 250. We've already broken actually the 2020 low in TO of about $6. And who knows, maybe we'll go back to $1. So if that occurs, I think that's another one. And yeah, again, that will be more cap gains play, but you'll still be getting a nice dividend off that too. And these are the kind of opportunities I'll show. And then we'll also have a time frame. Like I'm not recommending buying these right now, right? So anyhow, and obviously I think, we've done really well in our shorts. And if you want to wait, you can just see those shorts I gave you, see how they do the next few months. But anyhow, all of these videos and all of the trades I've been giving for free, that is going to be coming to an end as of this Friday. So, and also too, I got a really fun service I'm going to add. And this is the kind of thing, if you do the $8 a month service, that you'll really help me with. So you see, I've got some really cool, fun videos I'm doing. I love champagne. I've been off it now for a little while because I sometimes drink too much of it and I want to lose weight, and there's a lot of calories in champagne. But anyhow, when I'm going to England and Spain this just July, if you have any recommendations, and because I do love champagne, if anyone sends me a little gift box, say about $1,000 of champagne, you can get a lifetime subscription. And not only that, you don't got to do the $50 a month. you know. So maybe that's a bad thing where my priorities are, but anyhow, but you'll see that it's champagne, and I'm a good cook. So, and cooking and then talking about investing, and I'm going to be traveling, and then I'm going to talk about light island lifestyle and all these fun things. This is going to be my basic page. So it's going to be a very eclectic YouTube page. Anyhow, I'm just going to leave it at that. And I hope you enjoyed this video. I hope you enjoyed the ideas. I hope you enjoyed, this idea that, commodities might see this year. And and just to get back to interest rates, I think it's because that's one of the most important things. I do believe the Fed will pivot. I just don't think they're going to pivot now. The people that think they're going to pivot, like if the market drops in the next few weeks, that's not going to happen. The Fed is going to pivot probably after that. As long as the market continues just to grind lower like it has, they will probably pivot. Sometime in the fall, probably in October, after that last 50 basis points in September, when interest rates are back to 3%, the yield curve at that time could definitely be inverted. Because when I look at the TLT chart, again, this is a shorter term chart. Yeah, I could see this kind of maybe bottoming here, and I don't know, rallying to 125, something like that before it longer term heads lower. But I could definitely see that here, And then I think the next phase is, as much as we're talking about inflation now, after a short term kind of deflationary, bust here, when the prices of everything come down over the next 9 month period. I don't know if you hear my cat there in the background, but anyhow, I think that's when we're going to see the really bad inflation. I know I'm sorry that disappoints a lot of people, because I think what they're going to be doing is pivoting, cutting rates, and printing at a time after this first wave in inflation. So, and they kind of did that in 75 and 76, and that kind of set the stage for that second late rage in inflation, or move inflation in the late 70s to 1980, which was even worse. Anyhow, I'm going to leave it at this. I hope you really all enjoyed this video. I like doing it. And I hope many of you become subscribers and or at least Patreon members. And thank you very much.